I've been trading for over 5+ years and I've tried hundreds of different complex trading strategies. And it took me years to realize that having a boring and simplified trading approach is what ultimately led me to making consistent profits in the market. Last month, I made over $44,000 using what I consider a boring trading strategy. The reason it's boring is because it's mechanical. It doesn't require any daily bias. You don't need any fancy indicators and it requires very minimal discretion. So in today's video, I'm going to be sharing with you my boring and simple trading strategy along with 3 trading setups that I use on a consistent basis. And then I'm going to be showing you live trades that I took in real time. So with this being said, let's get right into the video. So as you can see right here, I have my trading statistics pulled up for the month of March. As I mentioned, I ended up making over $44,000 on this month. My trade win percentage this month was 66%. So I actually ended up having a really solid trade win percentage this month. Generally speaking, my trade win percentage is anywhere between 40 to 60%. So based off this month's statistics, I was a little bit on the upper range of my trade win percentage. As for my profit factor, 5.24. Day win percentage was around 88%. So I had 15 winning days with only 2 losing days. So it ended up being super solid, basically green all month. The first week I had a few red days, but besides that, basically the rest of the calendar was green. And most importantly, the average win to loss ratio, which was 2.62. I usually try and aim for around a 1 to 2 risk reward ratio. So that means for every single dollar I'm risking, I'm looking for at least $2. This month, I ended up having a couple trades that ended up boosting up my win-loss ratio. So the first trade that I took this month ended up being a $12,000 winner. And then I had another super solid trade later into the month, which was on Tesla and then Nvidia as well. So as you can see here, this is one of my more solid months of the year. A lot of that has to do with the fact that the markets are very volatile right now. So as you guys know, a lot of my trades that I personally take are a lot of intraday momentum and scalps. And when the market presents opportunities like this, where there's a lot of liquidity and volatility in the markets, that is the best time to look for trading opportunities intraday. And that's exactly what I've been able to capture. And that's why I've had so many green days. As you can see here, as I scroll down on my calendar, basically all green for the whole month. We had a few losing trades earlier into the month, which was on the 6th and 7th. But besides that, we we're basically taking 1 to 3 trades per day. And all these trades were fairly solid with continuation as well. And now I'm going to be showing you the strategy and setups that I use this month, along with some live examples as well. So now let's talk about the bare bones of my strategy. And what I personally trade is what's called the break and retest. So within the break and retest in itself, I have 3 primary setups. Number 1 being the opening range break and retest. This is one of my personal favorites. I have plenty of videos on this opening range break and retest. What we also have is the order block break and retest. And then we have the previous day high and previous day low retest. So these are the 3 primary setups that I use last month on a consistent basis. If I'm not using the opening range break and retest, I'm using some sort of order block to get in, or I'm using the previous day high and low break and retest. As I mentioned, all these setups are within the break and retest system in itself. So all the entry criteria are fairly similar. The difference between these setups is they're just at different key levels, but they all serve the same purpose. So really what we're going to be looking for in regards to the break and retest is we're just going to be looking for the price action around the key levels. So let's say, for example, this is your previous day highs. So what we want to see is the reaction that we have off of your previous day highs. If we can get above with displacement, what are we going to be looking for? The potential retest off of your previous day highs for this continuation back towards the upside. If the market wants to show some weakness, and let's say we get back underneath your previous day highs, we can be looking for the retest back towards the downside. So all we're doing is looking for the reaction around these key levels. This is basically what the strategy entails. Now let's go into the actual individual setups themselves and take a look at them a little bit more in depth. So the first setup that we have in this case is what's called your opening range break and retest. And basically how the opening range break and retest works is we're going to mark out the first candle high and low of New York session open. So at 9:30 a.m. Eastern Standard Time, this is when the New York session opens. What you want to do is mark out the first candle candle. So you can see this is the first candle of New York session open. This can be on the 1 minute time frame, this can be on the 5 minute time frame, on the 15 minute time frame, depending on what time frame that you trade on. This is going to be the first candle of New York session open. So we want to mark out the high and low of the first candle, and then what we want to do is wait for the break above or below the first opening candle. So in this case, what we have is this push towards the upside. So we have this nice push towards the upside here. Now what we like to see is the reaction off of your retest, which is going to be that opening candle range high. So what we like to see is the buyer step in off this opening range high to push price back up in towards, now it's going to be high of day and above. We also have another scenario that can play out on the opening range break and retest is if we actually get back underneath your opening candle range high, we can be looking for the retest off of this level for a push back towards the downside. In this case, it would be your opening candle range low and below as well. So this is actually a reversal setup. I use this quite often. If price doesn't want to continue in the general direction in which it broke out of, you can be looking for the reversal trade to target the opening candle range low. So this is a setup that I'll use if I'm expecting some sort of potential fake out on the markets, or if we're looking for an intraday reversal on a higher time frame trend. In both these setups, when we are looking at risk to reward, is going to be fairly tight. If we're looking for a pushback towards the upside, our risk is going to be very minimal. We're just going to be risking underneath this candle low, looking for this pushback towards the upside. And similar to the downside, if we end up having this retest back towards the downside, our stop is going to be fairly tight, and we're going to be looking for this reward back in towards your opening candle range low and below. And that's why the break and retest works so well, is because we can have minimal risk and we can look for the high reward. So we don't need a super high win rate in order to become profitable. We just need to be right enough and have a solid risk to reward ratio in order to capture these trades on a consistent basis. So the next setup that we have here is your previous day highs and your previous day lows break and retest. And all we want to see is the reaction that we have off of your highs and lows in the markets. If we can bounce off of your previous day lows, we could be looking for a pushback up and towards your previous day highs. If we reject off your previous day highs, we can be looking for a pushback down in towards your previous day low. And similarly, if we can break above your previous day highs, we can be looking for the retest for continuation towards the upside. If we break underneath your previous day lows, we could be looking for a continued push towards the downside. And this is one of the best setups that you can use in combination with other setups as well, with other confluences, because these daily highs and lows are the strongest levels that you can see on a chart. So these levels are not only intraday levels, they're also higher time frame key levels as well, being daily levels. So that's why these levels are the most high probability levels that you can be looking to take trades off of. When it comes to risk or reward when you're trading the previous day highs and lows, as I mentioned earlier, a lot of it is very much low risk. So if you're looking for potential pushback up and towards your previous day highs, right, and you're looking to trade off of your previous day lows, your stop's going to be right underneath, right? And then of course you're going to be taking partial targets along the ways. You're not always going to be holding for a push up and towards your previous day highs. If you're looking for a potential short position off of your previous day highs for a push down in towards your previous day lows, this is what your risk to reward ratio would look like. If you're looking for potential continuation underneath your previous day highs and lows, then you'll be looking for the low risk just to break above, and you'll be looking for this continued push down in towards the next external level that we have on the charts. So now let's go on to the final setup that I personally use. And the final setup that I have in this case is what's called your order block. So in a downtrend, what we want to be doing is looking for up close candles to be used as resistance. In an uptrend, we want to be using down close candles as support. So what we can see right here is that we have a clear downtrend in the overall markets. And as you can see, what we have is an up close candle. So if you have an up close candle in a downtrend, what we now want to see is this level be used as resistance for continuation back towards the downside. So what we want to have marked out for your highest probability order block is the wick to the body. This is going to be your highest probability order block, and you would like to see price reject off this area. If you want a more in-depth guide on how to draw order blocks, I have plenty of videos going over what order blocks are, but what we want to be looking for in this case is the reaction off your up close candle, and we're going to be looking for continuation towards the downside. So if we are looking for a trading opportunity and we're looking for potential entry point off this order block, what we can be looking for is our entry right off our order block with a stop just to break above, and then we're going to be looking looking for our targets, which is going to be continuation towards low of day below. So this is our reward, and then this is our risk as well. And then plus we could be looking for potential continuation underneath your low of day and potentially below as well. So with this being said, this is the final setup that I personally use within the break and retest system. These are the three primary setups that I use on a day-to-day basis. Now let's go on to some examples to show you guys exactly what this looks like in real time. And then I'm going to be showing you guys the live trading sessions as well. So as you can see right here, I'm on Tesla. This is my first example. This was on March the 4th. This was actually the first trade that I took of the month. Ended up being a super solid trade. Ended up making around $12,000 on this name. I ended up trading 30 contracts, which is more than I normally do. In this case, I actually added into my position, which is not something I usually do. The reason why I added into my position was because of the higher time frames, and it was such a good setup as well, respecting the higher time frame key levels along with showing relative weakness intraday. I ended up making 60% on the contracts, but as I always mention, what matters in this case is not the actual dollar amount, it's how much I risked. So in this case, I was risking around $1,800 on this contract, so it ended up being a 6.75 R multiple. So this means if you were to risk $1,000, you would make $6,000, and if you were risking $1,800 in my case, you would end up making over $12,000. And for the setups that I end up taking, this was a previous day low retest along with a opening range break and retest on the 1 minute time frame. So let's go onto the charts to see exactly what this looks like. So as you can see, coming into this day here on Tesla, we're underneath its previous day lows. So you can see we have a big push towards the downside on its previous day, and in the pre-market we actually break underneath its previous day lows. So coming into this morning, what we're going to be looking for is the retest off of your previous day lows for this continued push back towards the downside. And you can see right here we have that perfect rejection off of your previous day lows. This is where you could have been looking for that low risk entry, and then there's also another setup on the intraday time frame on the 1 minute time frame as well. So now we can mark out your previous day lows and go on to the lower time frames. So now you can see we're on the lower time frames. The key levels I had marked out coming into this day was your opening range high. You can also mark out your opening range low as well. You can see price pushes up. We're breaking above your opening range, but we're not going to be looking for a long position in this case because your previous day lows is right above. So it wouldn't make too much sense to long right in towards your previous day's low. So what we much rather do is wait for the reaction off of your previous day lows, and you can actually potentially short this back towards the downside because the higher time frames is leaning bearish. So in this case, what we can be looking for is the potential rejection off of your previous day lows. You can see in this case, right, this would be your really aggressive entry. What I was waiting for was the break back underneath your opening candle range. So in this case, I actually ended up taking a starter position once price was breaking underneath your opening candle range high on the 1 minute time frame. And then you can actually see we end up coming back to retest this opening range candle high once again, end up having a super solid reaction off this level. We end up forming our 3-bar pattern towards the downside as well. This is where I actually added into my position, and then we end up having this nice continuation lower. Now we broke underneath your opening candle range low. We end up using this as a retest, and then we end up having this super solid follow through back towards the downside. So you can see exactly how I was able to use your previous day low retest in combination with your 1 minute opening range break and retest as well. If you're strictly just a pattern trader, a lot of people would be looking for this long position towards the upside. But if you zoom out just a little bit, right, if you go into the 5-minute time frame, you can see exactly why this was such a great trading opportunity. So instead of looking for that opening range break and retest on the 1-minute time frame towards the upside, you'd much rather look for your previous day low break and retest towards the downside. Now let's go on to the live session that I had for this day. Coming into market open is going to be Tesla. It does seem like it's dropping here in the pre-market. This one does have a daily gap towards the downside. So for Tesla, as you can see right here, the key level that we have marked out is our 275. We have this daily gap all the way back down towards 255. What I like to see is really the retest off of your 275, which coincides with basically your previous day lows and your Friday's lows as well for a continuation lower. So you can see right here on Tesla, the game plan is fairly clear. We have a huge gap towards the downside, but what we're looking for is the fade off of your Friday's lows, which is also coincide with your previous day lows as well for this potential continued pushback towards the downside here on Tesla. Yeah, so far SPY's retesting your previous day lows as well. Not sure when my trading view charts on, but yeah, Tesla here, watch out for the 265s. If you have a weak candle closure, we can use basically your 275, 62 as risk now. If we have a weak candle closure underneath this 274.
Yeah, all
Dude,
right.
that's
I got some of the Tesla, the 265s on Tesla. My risk in this case is going to be this 276. I will look to add on most pops here. So rejected off of its previous day lows, and now with the Qs dropping here as well, I do expect Tesla to head down towards its opening candle range low and then potentially lower on this name. I got the 265s on Tesla.
So as you can see right here, I just entered into a position here on Tesla, which is the 265 puts. What I was looking for was this push and break back underneath your opening candle range. With the Qs dropping here as well, I like to see continuation lower. Tesla now, I like to see it just maintain underneath this 273 for a continued push towards the downside. The reason why I got a more aggressive entry instead of waiting for the retest was because the higher time frame was bearish. It rejected off of your previous day's low. The Qs were showing weakness as well. I didn't want to miss out on this huge trading opportunity because there was a big gap towards the downside, and I was going to be looking to add on all pops as well, risking off that 275.
Q's flushing here as well and back underneath this 490. If we get a weekend closure, this can move quick down towards 265. Contracts around $9 a con now.
So you can see Tesla pushing down nicely after rejecting off your 274 once again. I end up adding into my position. Risk is just a break above this 275. And now what I like to see is continuation underneath your opening candle range low for this pushback towards the downside.
So far, sellers are stepping in on the Qs and Tesla, but we still have to make a fresh low on the Qs if we're going to have that continuation lower.
down
Yeah,
here.
there's that 10 o'clock too. See, look at that time. All right, nice push lower here on the Qs, right at 10 o'clock as well. Tesla coming down towards this 265 is a key area. Contracts now. Make sure to scale here with the Qs flush now. Super solid.
Yeah, so you can see super solid trade here coming into 10 o'clock. Tesla rejecting off now your opening candle range low along with this 1 minute order block. Qs getting underneath this 493.60, pushing down towards the downside as well. So this ended up being a super solid trade here on Tesla. So I sold majority of my position on Tesla down in towards this 264.96. I cut the rest of my position once it broke back above this 267. Now let's go on to the next example that I have for us today. So I'm on my second example here, which is on Tesla, Wednesday, March the 26th. I actually ended up taking two trades on this day. One was on Nvidia towards the downside, and then also took Tesla along as well. This ended up being a $7,800 win. As you'll see, my position size has increased this year just due to the volatility and liquidity in the markets. 2024, there wasn't too much liquidity intraday. It was just a lot of higher time frame setups with swings, and price was just pushing towards the upside. But now with this volatility and liquidity in the markets, you can be looking for a lot more setups intraday. And since there's so much liquidity, you can put on more size because these option contracts are more liquid. As I mentioned, what matters is not the actual dollar amount, it's the amount that you risk. So in this case, I risked around $2,000 on this trade, which ended up being a 3.73 risk to reward. The setups that I ended up taking in this case was your opening range break and retest on the 5-minute time frame. You can see these are the executions for the 280 contracts that I end up trading. And as you can see, this perfectly lines up with what is shown here as well. Now let's hop onto the charts to see exactly what I was looking for. So as you can see here on Tesla, what I have marked out will be your key levels. In this case, this was your key pivot level from earlier into the day. It technically was not your previous day highs. Your previous day highs was all the way back here, but you can see reaction at your key pivot point. We had another reaction later into the day. Once we got above this level, we ended up having this nice push towards the upside, but then it ended up just opening up right around your pivot point from its previous day. So this is going to be a very key level coming into market open here on Tesla. So we can have this marked out. Now coming into market open, what are we going to be doing is looking for the reaction that we have off of your 283. If we can get above your 283, we can see potential continuation back up and towards it's going to be your previous day close. If we reject off your 283, we can see this push back down in towards your previous day lows, which is all the way down towards your 272. Now let's go on to the lower time frames. As you can see here, now we're on the lower time frames. We have our key pivot point drawn out, which is our 283. You can see right off the bat, we can also mark out your opening range candle, which is basically your opening range high. We can also mark out our opening range low here as well. In this case, for your opening range low on the 1-minute time frame, we really didn't have too much reaction off of your opening range on the 1-minute time frame. So what I had marked out in this day was actually your opening range on the 5-minute. So I had your 283 marked out. I also had your opening range low marked out as well. You can see price tries pushing towards the upside towards your 283. We're unable to get above your 283. We end up pushing lower with displacement underneath now your low of day. Also your 5-minute opening range low as well. Price comes back up to retest this level perfectly. This is exactly where I get in, which is offer 280. My risk just to break above, and I was looking for continuation towards the downside. You can see how well this ended up playing out right off of your opening range on the 5-minute. We ended up having weak price action around this key level as well for this continuation lower. So now let's go on to the live session to see exactly how I executed this trade in real time.
Keep an eye out on coming to market open. Tesla's going to be the main one. We're going to keep an eye out now. Basically, it's going to be Nvidia, previous day lows, Tesla, if we can hold above and really reclaim this 285 coming to market open, and then we'll also keep an eye out on AMD as well.
So So yeah, coming into today, as I mentioned, my watches, we're going to keep an eye out on Tesla, the reaction off of your 284, and then Nvidia, we're going to keep an eye out on your previous day lows, which is your 119.
Yeah, so we'll see what happens. We have about a minute here until 10 o'clock as well. Basically, the markets, after that initial pop on SPY, kind of faded off towards the downside. Now we're just going to mark out up close candles if we're going to be looking for potential continuation lower. Tesla, the key level is going to be this basically 5-minute low, 280 if it can come back up into that. And then Nvidia is coming back up. The key level now is going to be this 1-minute order block.
So you can see we have the tape played out for the first 30 minutes. You can see Tesla rejecting off your key pivot point. You can see the Qs are showing some relative weakness here as well. I personally didn't take any trades within the first 30 minutes. So now what I'll be looking for is the retest on Tesla, potentially off your 280. For Nvidia, it's going to be this 1-minute order block retest. And now we're going to be looking for the retest for this continued push down on the overall market with the QQQ weakness as well.
Yeah, let's keep an eye on Tesla here. This one, previous day lows, sorry, your 5-minute opening range, up close candle as well. Your 280.43. All right, I got some 280 puts here on Tesla. Risk is just going to be a break above this 280.70. So if the market wants to stay heavy here, that's great. Risk fairly tight, just going to be a break above this candle. And then I'd like to see some continuation lower on the overall markets.
So as you can see right here, I just entered into some of the 280 puts here on Tesla. I really like this setup. So I kind of got in before this candle closed. So it's a little bit more of an aggressive entry, but my risk in this case was fairly clear, just a break above this 281 key pivot level. For the QQQ, I like to see it stay heavy underneath this 490. And then for Nvidia, I like to see it hold underneath this 1-minute order block.
Nvidia looks good as well. Risk would just be a break above that 117. Yeah, the Nvidias, I know actually taking some Nvidias as well, about that 116 risk.
So I ended up taking some Nvidia contracts as well off this 1-minute order block. My risk in this case was just a break above, a little bit of a later entry, but I really like the setup as well with the Qs rejecting off of your 490 along with Tesla rejecting off your 280 as well.
So yeah, Qs, a little bit of reaction here around low of day, but that's basically what we wanted here. Now for the Qs, if we can get some more continuation lower, right, that'd be perfect. Nvidia's going to drop, Tesla's going to drop. If Qs ends up reversing here, then these ones are more relatively weak, so they could technically still stay heavy. Yeah, Tesla scale along the way is 275. Next level for Tesla, basically the level that we just hit, and then all the way down towards that 274. You can see the relative weakness compared to the Qs. So now, right, let's say Tesla, potentially you can see 274 if the Qs drops, but this is your key level 274. Make sure it takes them off here on Tesla.
So yeah, super solid continuation towards the downside on Nvidia and Tesla. You can see Tesla made a new low of day while the Qs is technically defending your low of day. So that just means that Tesla is relatively weak, and we should see some more continuation towards the downside if the Qs can potentially break underneath this 489 as well. Similar to Nvidia, this one, I like to see that push down in towards that 115. But yeah, as you can see right there, super solid push on the Qs underneath this 489. Nvidia hit my main target, end up selling my full position down towards that 115. Tesla end up selling majority of my position down in towards this 273. So this ended up being a super solid day in the markets. Took the 5-minute opening range retest on Tesla, order block retest on Nvidia with the overall Qs weakness in the market as well, which ended up being super solid. So now let's go on to the last example that I have for us today. So now you can see we're on my final trade example. This is on Nvidia Friday, March the 28th. This ended up being a $3,000 day. Ended up trading 60 contracts on this name for a net ROI of 60%. This was on a Friday, so the 0 days. That's also why I was sized down here as well. I was risking around 70 cents on the contracts, and my risk being around $1,000, and my R multiple in this case was a 2.84 risk to reward ratio. For the setups in this case, it was an opening range break on the 1-minute time frame. Now let's go on to the charts to see exactly what I was looking for. So the key levels that we have marked out coming into March the 28th is going to be your previous day lows. We also have your previous day highs marked out. So you can see we have a big push down on this day. Day number 2, we consolidate. So day number 3, what are we expecting? We're expecting continuation towards the downside if price can stay heavy. So in this case, the key levels we have marked out is going to be your previous day lows. We're also going to mark out our intraday key pivot points as well. And we're going to be looking for continuation towards the downside just based off of day 1 here on Nvidia. Now let's mark out our key levels. So our key levels in this case can be your previous day lows. And now we can go into lower time frames to mark out intraday levels. So you can see right here, coming into market open, the key levels that we have marked out is now going to be your opening candle range high. So you can see right here, coming into this day, what a lot of traders will do is strictly just be pattern traders. They'll mark out their opening range, wait for a break, retest, and then they'll look for continuation, right? They'll have a nice entry point, as you can see right here. What they'll do is have their stop just to break below, and then they'll have their targets being high of day and above, and they can see they'll instantly get stopped out. The reason being is because they're not looking at the higher time frames and they're not thinking with context and logic. If you zoom out just a little bit, you can see prices rejecting off of your pre-market highs. We're well underneath your previous day highs. We're actually coming back to reject off of what? It's your day one lows. So this is technically not a previous day low retest, but it's a retest off of your low that we created on March the 26th. So this level right here, which is your low, is now being used as potential resistance for continuation towards the downside. So this is a very similar setup to what we saw before, which was the reject off of your day one lows. So now you can see this makes a lot more sense on why it would be very difficult to look long. So you can see that price just came up in towards your March 26 lows, rejected off that level, came back down with a very strong reaction, created that lower high, broke back underneath your opening candle range on the 1 minute time frame. And you can see price is now showing weakness. Got back underneath, retest once again. Coming into 10 o'clock, I was very much bearish on this name, stopped just to break above, and now I'm looking for a continuation towards the downside to target your low of day, your previous low of day, and below as well. So this ended up being a super solid trade towards the downside using the opening range break and retest. And hopefully you guys are understanding the logic and context behind what I'm explaining. Of course, I'm explaining this in hindsight, but I'm showing you guys the real trades and the thesis behind why I took the trades in real time as well. And really this is the important stuff, and not just understanding the pattern, but understanding the context and logic behind the patterns and why the trades actually work and the reason why price moves. So now let's hop onto the live session that I have for this day. As for Nvidia, this one, I still am interested in this one and the pop and fade off of your 113. So we can keep an eye out on this one. So you can see right there, what I'm looking for is fairly clear coming into today on Nvidia. I'm looking for the pop and fade off 113. If we can stay heavy underneath 113, we can see some more continuation towards the downside. The reason being is because we had a very big push towards the downside. We started consolidating, and now we'd like to see continuation lower on day number 3 towards the downside.
The 5-minute setup on Nvidia looks solid for a continuation lower. So far, it's kind of rejecting off this Wednesday's low, and I can see a nice little reaction. What I like to see on Nvidia really is this push back down towards low of day and potentially your previous day lows. This one is going to have to stay heavy, so it's going to have to break, hold underneath this level now, which is now going to be this opening range. You like to see Nvidia hold this level for a continuation lower.
Now, what I like to see is Nvidia stay heavy underneath your 1 minute opening range. After rejecting off your Wednesday's lows, I like to see it stay heavy, and then I like to see some continued push towards the downside.
Yeah, I just picked up some of the 111s here on Nvidia. I'm on lighter size since I don't have the greatest entry, but I have some 111 puts. My risk is going to be a break above this 111.80.
So as you can see, I just entered into the 111 puts. I'm on lighter size because it is Friday. Risk is just going to be a break above this 111.80. And now I'm looking for this continued push towards the downside. Qs, I like to see it stay heavy underneath this 478 for this continued push towards the downside as well.
Yeah, nice push lower. Make sure to take some off cues. Nice drop here. Next level Nvidia all the way down towards this 109. Tesla previous day low basically just hit. Sorry, low of day. Next level 267. You can see SPY. Nice reaction off this 564. QQQ next level. We have lots of more room lower actually on the Qs.
So as you can see now, Qs starting to push towards the downside underneath this 478. Nvidia I like to see now just this hold underneath this 110, but super nice push. Now we're looking for continuation down towards that next key level.
Yeah, closed full position here on Nvidia. Still holding a couple Teslas.
So you can see Nvidia end up selling my full position down in towards this 109, end up being a super solid trade with Q staying heavy as well, down in towards that 472. So with that being said, I hope you guys enjoyed that video along with the live trading sessions as well. If you did, I'd greatly appreciate it if you guys could drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.